Good morning, everyone. It is Monday, March 9th, and kind of a crazy morning, really a crazy afternoon, but I'm in my basement here, and my wife Donna would kill me if she knew I was taking a video in our messy basement because we haven't cleaned up recently, but I had to record this because of what's been going on in the markets overnight. And so here's the question. What do you get when you mix coronavirus with oil? All right, here's the answer. You ready? Circuit breakers. So circuit breakers are something that was enacted in the market, in the stock market, back in 1987 after Black Monday to keep the market from crashing. So what we have overnight here in the futures market, and by the way, the futures market is just, basically it's the stock market trading overnight throughout the night. Most people don't know, or I should say the average investor doesn't know that the market trades all night long. You can trade S&P futures, you can trade Dow futures, you can trade NASDAQ futures, but my point is, overnight the market went down pretty quickly because of a little disagreement between Russia and OPEC. So Saudi Arabia wasn't exactly happy with Russia's stance on oil. It's not due to people not traveling as much. That's not why oil isn't down. It's not due to people not getting on cruise ships or airplanes. I mean, that's probably a small part of it. But really, at the end of the day, the biggest reason overnight, oil went down about 30% at one point. And when you mix coronavirus with oil, what you get is circuit breakers. So first and foremost, make sure you read my other market commentary. I'm going to be writing a little bit more about this and elaborating using some charts. But market conditions right now, extremely oversold. They were oversold yesterday, Friday, when the market closed. Sentiment, so that's basically the feeling that people have about the market and finance and the economy. You know, when sentiment is very, very overbought, then that's typically a sign or a warning sign that we could see a short-term pullback or a correction in the market like we've seen. And sentiment was very overbought at one point recently. Now what we're seeing is the opposite, which is very oversold sentiment. Sentiment is in the basement right now. So this is probably more of a sign that we're reaching a point where we're probably hitting a short-term bottom versus a short-term top. We're seeing a W bottom, so a W-shaped bottom. If you put your thumbs together and make that W sign, that's how short-term corrections usually bottom. You get a low, then you get a dead cat bounce or a bounce in the market, then you tend to see another low, call it a retest, and then markets tend to head to new highs thereafter. The buy signal technically happens when the market crosses above the middle point or the middle part of the W. That's the buy signal. So bond prices are spiking because interest rates are tanking. In fact, if you've thought about maybe getting a refinance on your mortgage, don't procrastinate, don't be a hero, and don't get greedy here. This is probably a great time to reevaluate your mortgage. If the weather outside is analogous to the stock market, then what we're seeing, in my opinion, outside is still thunderstorms. You know, it can get cloudy, it can get rainy. We can see thunderstorms is what I think we're seeing right now, but these are not tornado sirens. Tornado sirens are the kind of market drops that I think warrant the need to get out of the market altogether, and I don't see that happening right now. So in my opinion, probably best to look at this like the 2011 U.S. Treasury downgrade, which is just a short-term correction still. So turn off the financial news, watch a movie, ideally not Pandemic on Netflix, probably not the best movie to be watching right now. And then, like I said, there's no tornado sirens just yet, so try to take it easy, try not to worry too much. When it's time to go to the basement, you'll be the third to know. I'll be the first, my clients will be second, and I'll send it out to the public last. But otherwise, until my indicators tell me it's time to get out, we're going to keep doing what we're doing and sticking with the flow. And we've dialed back our portfolios a little bit, been a little bit more conservative than we have in the past, about a month ago. But other than that, we're still staying the course for now. It's not time to go to the basement yet. Any questions, email me, call me, Adam@libertaswealth.com or 614-543-1350. Happy to talk. Thanks.